Rather than the shock and collapse of 2008 of the US, we got, to be honest, a milder decline of the market. And that is what has given us an opportunity to reset and reform the market.
Hello, everyone, and welcome to another episode of the Real Estate Development Insights podcast, where we bring you ideas, experiences, and best practices from the real estate development industry. My name is Payam Noor Salehi. I'm the president of Denham Project Management, a construction and project management firm that helps real estate developers define, design, and deliver successful projects. Thank you for being here. My guest for this episode is Mwarigha MS. He is the Vice President of Housing Growth, Development, and Asset Sustainability at Woodgreen Community Services, one of Canada's leading nonprofit affordable housing and human services organizations. He previously served as a General Manager of Peel Housing Corporation, which is Ontario's third largest municipal housing provider. He's a seasoned affordable housing developer. He leads Woodgreen's strategy to deliver 5,000 new affordable homes through development, partnerships, and acquisitions. His achievements include delivering Toronto's first national co-investment fund and open door program project, which was a 36 home for low-income and high-needs seniors, and which was completed during pandemic and fully occupied in 2022. In this episode, we're going to talk about some of the ideas they've been promoting and some of the work they're trying to do. As I've had the privilege of working with nonprofits in the past, and I'm trying to help a few at this very moment in time, there are quite a bit of significant challenges when a nonprofit tries to create affordable housing, and we're going to dig deep into those. And Mwarigha has a plan. Mwarigha and Woodgreen, along with some other partners, which we're going to dive into this in the episode, have been working on a plan and get financing in place and hopefully create more affordable housing. As always, you can find all the information about our guest and this episode on our website, realestatedevelopmentinsights.com, realestatedevelopmentinsights.com. That's all one phrase. And please remember to subscribe to the show. Even better, tell others about us and help us grow the show. Thank you and enjoy listening. Hi, Mwarigha. Welcome to the show. How are you doing today?
Hi, Payam. I'm good. Yeah,
Fantastic.
Happy New Year.
Happy New Year. We are recording this in the new year in 2026.
Yeah.
Thank you very much for being here.
Yeah.
Let's start by you giving our audience a little bit of an introduction about who Mwarigha is, and we go from there.
Mwarigha is the Vice President for Housing Growth, Development, and Asset Sustainability. It sounds like a long title. The growth and development part will speak for itself as we talk. The other big part of my portfolio is asset sustainability. In other words, building green buildings. How do we transform Woodgreen's into a green building? For every one new building we build, we lose 15. And in the nonprofit social housing, supportive housing sector, we cannot afford to do that. So we've intentionally also created a focus on asset sustainability.
Okay, I want to circle back to those, but before we dive into some of the things you just mentioned, what's Woodgreen?
Woodgreen is a multi-service organization, and that's important because the focus of our organization is to look at the clients who live in low, moderate income and also have social challenges ranging from homelessness to mental health to a drug addiction, what we call the hard to house. And for the hard to house, we bring a menu of different services because housing is important, but it needs to be also anchored on other individualized services that range from mental health, like I said, help with addictions. So we have a very significant health and seniors outreach sector as part of our ecosystem. We also have a large employment services and training part of our menu of services that we provide. And the whole idea, without naming every one of them, is to be able to provide a holistic service to people that we house both inside Woodgreen and also in the larger neighborhood. We're a GA-focused organization, primarily in the downtown east and west part of the city of Toronto. So we do cover a fairly large geography. And so housing in that context is just an anchor piece on trying to make sure that our 40,000 or so clients annually get a holistic set of services.
Gotcha. You and I are going to talk about real estate development today, but you don't look like the big bad developer. You don't sound like the big bad developer. And any of the things that you just, none of the things that you just explained sound like what a big bad developer should be doing. What am I missing?
I think for me, I didn't come to development as a financial outcome. I think that's an important part. I'm an urban planner by training with a strong emphasis on social outcomes, social sustainability, social impact. So that's a big informer of who I am. And in fact, for the most part, when we did housing at Woodgreen, and that was my role, it was largely to operate the existing portfolio that was built through the old social housing programs. And then we also had a very strong relationship with the private market sector. As at that point, there was enough room in the market for us to be able to house low and moderate income people that we supported as external clients to Woodgreen. Fast forward 4-5 years ago, and the rental market really just bottomed out, especially in terms of access to the lowest and moderate income people. And at that point, up to that point, Woodgreen had been an incremental sort of one-off developer. And we realized that the plight of our clients was going to be really severe or dire if we didn't actually get into development. So we come into development with a notion that we need to be able to champion the needs of our client group. But we also realize as we go into development that it's really one sector. The art of development is the same, private or nonprofit. We may have additional entitlements, and we can talk about that, whether they're enough. But on the whole, that is what has brought us into development. And so we're not it's not a financial.
It's a mission-driven process, basically.
You got that right.
I understand that. Yeah. So let's branch off of that a little bit. Affordable housing, non-for-profit housing, when you talk to a private developer, they might be shying away from it. They might be scared. They might be thinking this is a hard-to-operate product, long-term issues. It's going to be hard to run on a day-to-day basis. Is that a misconception? Is that a myth, or does it have some resilience of truth?
It has some resilience of truth, because up until more recently, our market was basically segregated between the purpose-built rental, which is market, and you have an independent tenant. They pay your rent, and your fundamental relationship is just about the financial transaction and the service you provide. And then we, as the nonprofit sector, were created for the most part as turnkey developments that were very mission focused on the service side of things, and even not the service side and the property management side of things. So when you try and create an integrated or a fused product out of those two, there is going to be, first of all, a cultural issue that you need to overcome. A lot of that has to do with private developers who quickly tap into the mission-driven side of things. It's much less successful if they come to it because they have an obligation and that they're trying to fix their pro forma. And so they try and swing this mission without having that internal thought themselves. Likewise, for us as a nonprofit sector or affordable housing sector, creating products, which is where we're going, that are integrated with private sector developers require a cultural swing on our part and an understanding of the economics of the development that is a hybrid development, and also some of the different property management standards and culture, and as well as how to actually participate in making sure that the lives of our tenants, who are for the most part lower income, moderate income, but we're providing supports to live in a community kind of setup. And I think that is an excellent and exciting accident, I believe, because it is beginning to force both of us to think about creating mixed income integrated communities that are much more reflective of what our society is, rather than a segregated sort of real estate market.
It's a more balance of social economic factors in the same context, which would help both sides. Before we dive too much into the development side of your business, you mentioned 40,000 stakeholders, our clients or tenants. Is that 40,000 tenants?
No, it's not 40,000 tenants. That's a good point. Like I said, we're like a satellite agency. We have about 2,000 tenants of our own that are part of the Woodgreen Community Housing Corporation. And then, like I said, we historically had a housing help center in which homeless people and people who needed housing, immigrants and so on, came to us through the Access Center. And we were able to get through our relationships with private landlords, we were able to house easily 5,000 of those. That number has diminished a lot, partly because, like I said, the private market itself has really shrunk. The opportunities for that lower part of the housing continuum have really shrunk.
Right.
Yeah. But we still maintain a housing access center that now more than anything else supports our partnerships with the private sector in providing and helping to manage on a long-term basis the relationship between tenants, and also in the vetting of tenants and processing the peculiar nature of the requirements that our tenants need to meet, as well as what their needs are when they're living in a stable mixed income housing community.
Yeah. Gotcha. Yeah. I'm not sure if this is a very fair question to ask you, particularly in the organization, but having dealt with thousands of tenants, and some of them being the ones that you just called them hard to house, which I think we can all get an image from that.
Yeah.
What are some of the key factors that you would say for new landlord, for new asset manager who's looking at maybe dozens or hundreds of units? What are some of the key factors they should keep in mind when dealing with this type of housing situations?
I think the most successful model that we know of is have a partner like Woodgreen. Doesn't have to be Woodgreen, like Woodgreen, and there's many of them that help to bridge the service side and make sure that what you're getting as a private sector person is a tenant, and that the service side of it is mediated through an organization whose daily work and whose resources in terms of social workers and housing workers is very well trained to do that. I think it's easier to become a partner of an agency than that, rather than try and create that capacity internally, because you really get crossed up in trying to become both a service delivery agency as well as a landlord. That's really the key part of what that needs to happen. If you don't do that, then you have to recreate the kind of infrastructure that we have at Woodgreen, which, like I said, is more than just a housing resource ecosystem.
We'll be right back.
Hey everyone, Pam here. Just really quick, here's what we've recently done. We've gone through our conversations that we've had so far on the podcast and many other offline conversations with developers, planners, architects, and we've created an assessment. It's called Development Readiness Assessment. It's free, it takes less than 5 minutes to complete, and once you complete it, you'll receive a structured feedback across 6 core areas that consistently show up in successful development projects. Projects don't fail because people lack ambition. They typically fail because risks go underestimated, assumptions go unchecked, or the project quietly outgrows the team behind it. That's exactly why I created this assessment. If this is your first time starting the project, a mid-rise, or even a multiplex, this assessment will give you clarity on your blind spots and where the risks lie. Check the show notes for the link to the assessment, or go to developmentreadinessassessment.com, developmentreadinessassessment.com. Thank you and good luck. And I can definitely relate to that because as a developer, as someone who runs these buildings, typically they don't have the teams or infrastructure or even knowledge or experience for that matter of dealing with some of these more complicated situations. I would say even more normal situations sometimes can get very complicated to deal with, and let alone some of the harder ones. And I think that has been one of the deterrents for new players on the private side to come into this market.
Yeah, and I can give you an example if you want.
Sure, by all means.
So one of the examples that we're really excited about is one that we put together about 4 years ago now with the Daniels Corporation at 25 Nicholas in Regent Park. And what we did as a nonprofit is through a grant from the city, we contributed to the capital stack in order to improve the viability of the building. In terms of the actual implementation and the long-term rollout of it, we agreed that we would be part of their property management system so that we're not creating two separate ones. We agreed that we would house a proportion, which was about 10% of the building, was going to be housed through Woodgreen and our access list. We shared with them all the criteria that we're using. Eventually, we settled on our single program, which is a homeward bound program that takes women from shelters and through a 4-year course of all kinds of supports, and then a graduation process that includes finding long-term housing for them. And so we also agreed that because this was a journey to independence, we were going to modify our support to them so that the tenants were living on different floors and are not congregated on one floor. Because the purpose of that was for them to actually go and mingle with the rest of the community and become synonymous with every other tenant and facility that was provided there. From an operating side of things, we agreed that generic property management should actually be done by Daniels. And so we signed a shared services agreement on that piece. We did the tenancy management part and they did the actual repairs part and the capital part. 4 years later, this model has really worked out well. We have very strong liaison with the Daniels property management team. And it's an example that we're really proud of and happy to share. Does Daniels actually share it as a partner in many of the real estate forums under the label of Partnership for Affordable Living. And we're hoping that's a very
good example. And that's very good to hear that because like you said, this is hard. And frankly, many of these things you will only learn once you've started doing at least one pilot project. I think if I wanted to summarize it for myself, Daniels, on the long-term basis, they're looking at the hard side or the hard part, physical part of the property management, and you guys deal with the soft issues being like special needs and services and something, whatever is different from a typical building that property management needs. Is that a fair way of putting it?
That's a fair way, but that's just our first generation. Second generation of this kind of partnership is actually now evolving into actual co-ownership. And with a co-ownership, we get to discuss a different way of how do we co-develop together and how do we co-stack the different entitlements and resources that we have to make the project viable. How do we make that 10%, which is 34 out of 340, 300 out of 1,000 of a pipeline by a developer that they intend to build in the next little while? And how do we go to CMHC and Build Canada Homes together as a joint proposal and say, this is the value we're trying to deliver at scale in terms of affordable housing?
Gotcha. Yeah. That's really good. I want to go back to something you opened with, that for every new units that we create, we lose 15 units to disrepair and damages or demolition. Can you maybe elaborate on that, where that number comes from, what the logic is behind it? It seems really out of proportion.
It is amazingly out of proportion. And the explanation is a bit historical. So you have to remember, and I always tell people, we really have one purpose-built rental sector portion of which is private, and for the most part was the largest part of it. And the other portion of it is a social housing from a real estate perspective. As many of the audience know, the purpose-built rental sector really was slowed down in the 1970s with the ending of the multi-unit residential building program, the MURBs. We set that off. There was an attempt to leverage social housing as a way of keeping the purpose-built rental sector going, but even that faded away by the 1980s. So what you have after that is really very little new buildings. 40 years later, many of these MURB-produced and other investor-produced assets have really just grinded their way down and become less and less functional, so to speak. And so what we have is a housing supply shortage, but we also have a phenomena of potentially bleeding the existing assets from the system because of attrition and aging and all that stuff. And in addition to that, you also have owners, many of them who are owners who've had these assets for the last 40 years, and it's, I think I want out. And in that, getting to that decision is also accompanied by a lack of new investments into those assets. So as a result of that, you have assets that are not fit for purpose and deteriorating, where the quality of life for the tenants invariably is compromised. And then on the other hand, you have people who do not have housing. It's a really double whammy. And we, as Woodgreen, have stepped into that in two ways. One, we have a fairly ambitious asset green building and modernization program for our own assets. Back in 2020, we became the organization in Canada to utilize energy savings as a financial tool. So we financialized our energy savings, and I can go into the complications of it, but in a simple way, to become the first investment ready. And it was a really good experiment for us, model for us, because it showed that they are non-grant based ways in which we can do our capital renewal or our asset renewal. In fact, because of that, we received the Green Building Award, a Green Building Council Award, for precisely that. Over the last 3 years, the results of that project have just been amazing. We actually make money out of the investments we made, believe it or not.
Very interesting.
In our major capital renewal and building repair work. And now our second phase of the project involves the largest purpose-built rental green building project in Toronto, private or non-profit, and especially in Toronto. There's a similar one in Hamilton. And that one is a close to $40 million investment. And we're using it as a teaching hospital for the overall purpose-built rental sector on how we turn old buildings and continue to make them relevant, not only in terms of affordability, which is key for us, but also in elevating the quality of the product and the life of the people that live there. And be working on that for the next couple of years, and hopefully you'll be able to hear about it as a showcase, which is what really it's about. And I really want to emphasize, part of what I want to bring out here is what we've also learned to do is, as a public benefit organization, Woodgreen, we've also realized that our ability to tap into some of these opportunities need to be returned back into the public space, both for private and for other nonprofit developers, in order to understand how we can together continue to have a viable and a healthy and a fulfilling, a place where people's lives are fulfilled, purpose-built rental sector.
Yep. Gotcha.
Yep.
Thank you for that explanation. I want to go to one of the recent blog posts or articles that you had published. And there was a particular section that I very much liked, and I'm going to read from that article, which the article says, Housing is more than shelter. It's the bedrock of social cohesion, thriving families, and a productive economy. Yet, in Toronto, Canada's largest and most economically dynamic region, this foundation has been steadily eroding for nearly 5 decades. What we face today is not a short-term imbalance, but cumulative result of structural gaps in policy, investment, and market incentives. So there are a couple of things in that paragraph that really resonate with me. One is the fact that it's not a short-term phenomenon that we're dealing with right now, regardless of what your popular councillor says or your mayor candidate might talk about these days. This is a long-term problem. This is long-term results of long-term problem that we are facing right now. And I want to ask you to elaborate a little bit more on the 5 decades, when did it start and how do you see these structural gaps in policy? And then I think with that, we go to your solutions.
Yeah. So that's good. I think part of the premises that you started with is amazingly today, and unfortunately so, even before we talk about housing, I look at it as we have an affordability problem. Now, the affordability problem, you would agree, is the result of a multiple number of issues, including food and essentials, including daycare costs, but aggravated by a slower economic income growth over the last 30, 40 years. So that's been part of the issue. However, so part of the question is, how does housing operate in trying to make sure that all the components of affordability are moderated in terms of their negative impact, especially when out of the affordability package or packet of affordability issues, housing is the most dominant issue and the most dominant problem. And I think that is the one thing that has become way more evident today than the last 50 years. And so how have we got to that place? I talked about in the 70s and early 80s, the collapse of the purpose-built rental housing sector, and in its place, the private investment as the leading source of investment. I'm not suggesting that the success of the 1970s was driven to a large extent by private investments in combination with government investments. But the ratio of government investment to private sector was a lot less skewed towards the private, especially once the government withdrew from that, which is the scourge of policy in the 1980s and up to 2020 when governments withdrew. And so we have a market that's primarily driven by the private sector, largely unfettered, which is unfortunate because I think a little more guidance and guardrails by policy would have been extremely helpful. And so what we end up with is a competition for density.
True.
And optimization of cash flow and a competition for density as opposed to long-term family. We compromise meeting long-term family needs. And so we end up, when you compete for density, it's your one bedroom, it's your matchbox type of environment. And so we ended up, unfortunately, in that place. In the process, by the way, we also began to compromise some of the things that have made us one of the most livable communities, towns, cities in the world. And that's design and architecture and the creation of a complete community where you have a balance between residential, commercial, and recreation space and spaces that allow people to gather and begin to create the synergy that we need, especially as a diverse community or a country where diversity is an important part of the mix. You have to create those kinds of scenarios intentionally, and we just didn't do that. And by 2020, of course, the race for density we just started to create concrete jungle, and you know where that is going.
Yeah, we've done a good job of alienating a whole bunch of market segments and just catering to a few.
That's correct. And my wicked assessment is, in some ways, COVID, in its own wicked way, saved the market and provided us with an opportunity to do the reset, which is now, for the most part, a consensus on most people that the market needed a reset. And so rather than the shock and collapse of 2008 of the US, we got, to be honest, a milder decline of the market. And that is what has given us an opportunity to reset and reform the market. I think the National Housing Strategy was a good sort of representation of the kind of continuum of housing that we need to have housing both address our affordability issues as well as the fundamental needs of the different cohorts in the process. And unfortunately, I think we have dithered a little bit on the policy side. We're still, and I'm in that box. I'm a developer myself as Woodgreen. We're developers. We have to fix the pro forma. It is not working in the current circumstances, and we can talk about that. But the fundamental issue has to be on focusing in how we recreate a system that allows different types of products and that incentivizes and uses entitlements and all kinds of incentives to create the ideal that we want, which is community, different kinds of housing, and addresses the issue of affordability as well, because we have sufficient supply and people don't have to spend so much of their income, relative income, on housing and so on. And I think that is the challenge and that's the opportunity. And we at Woodgreen have come up with a strategy in working through our board that looks at ways that we think we can contribute on how to get there. Yeah.
So to your point, if I go back for the past 6 months, when the budget came out for this year, when the whole Build Canada Home ideas came out, I actually went through the documents and there are dozens of places that you see the words affordable housing, housing for seniors, and so on and so forth to be repeated dozens of times through those documents.
Right.
And we heard it firsthand from, you and I were at the meeting where we had the Minister of Housing, and we heard the same things firsthand. We want to do something. This is there's an intent behind it. There's a will behind it. But at the same time, it seems to me, at least sitting outside, that everything is taking a little bit longer than it should. The gravity of the situation, the timeline of the situation. I was reading something this morning that, funny enough, try and survive 2026 wherever you are, and maybe 2027 you start breathing again. Is that timeline acceptable from your perspective?
No, it isn't. And first of all, it's not. But secondly, if you don't make different choices, time and delay doesn't actually mean anything, because my philosophy is that time is choice. So the way you choose to use your time is what is more important. And for me, there's a few things that I like. I like the fact that there's a consensus, for the most part, that we need to focus on affordability and how to make housing as an enabler of affordability. So that's number one. And then number two, that we actually need to focus on from a project perspective and what we do in the development from a supply point of view, to focus on how we integrate affordable housing as a social outcome within the renewed development industry. So part of the call for MURBs, which I support, the return to MURBs, which I support, or the multi-unit residential program, building program, is the criticism at that point is that it didn't have enough guardrails and enough social outcomes in order for the tax incentives that embed it to actually return a public benefit and create, again, that balanced market that has to be the intent going forward. Secondly, as an extension of the MURBs, creation of intentional partnerships like the ones that Woodgreen and our private sector developers engaged in intentionally in order, again, to produce a product that has both outcomes of social impact as well as provide market housing for various levels of our workforce as well. Embedded in that is the notion of making sure that our projects optimizing the entitlements in a sort of packaged way. We're coming to you as a partnership with scale. And so the incentives on taxes, the incentives on development charges need to be packaged in this partnership of scaling. If we return to a process, 1,000 projects of 50 units each, and we think that's what's going to solve the problem, I think it's problematic. I think it's also problematic because you won't really solve the approval process because all you do is overload it with it. And so having a very conscious lens of scaling and operating at scale is a very important part of going forward. In addition to some of the earlier issues, making sure that there's a public benefit of affordability, but also making sure we return to the ethos of building communities that have a balanced set of facilities that allow people to live a complete life within their communities. Important principles for me. And also, I'm a big believer. So the one good thing, and I'm going to jump here, is the market, the real estate market today is way more developed than in the success years of the 70s. It has a huge pool of private capital that is interested in real estate, way more than it ever was. In some ways, the least of our problems today in anchoring a new market is not the availability of capital. It's just we need to make sure that we reattract capital investments into the real estate sector in a way that, first of all, creates confidence, because that's the big thing that has died over the last 5-6 years. And creating that market confidence, we've suggested tools like the Affordable Housing Investment Fund, in which a guaranteed fund through different levels of government is a workable solution, because that's what brings people back. People are doing well through the stock market, but that's a very reliable source of investment. We're lucky in Canada that most people still believe in real estate as their primary source of investment. So I think there's a real big conversation about that investment market.
So let's talk about that, because, and I appreciate the background that you just provided. So just for context, and these numbers are coming from that article of yours, that we built, or Canada built, tens of thousands of social housing units annually back in when they were focusing on it, and up to, and this number is really surprising to me, up to 60,000 units per year, which is, even at this point in time, it's a very significant number. Like, even in the past few years, we have had, maybe not the very past few years, but half a decade ago or so, trouble hitting these numbers. With that being said, and you mentioned about the new fund vehicle that you're proposing, and you and I have had offline conversations. And for context, I think there are a lot of older institutions that have land, that have properties, like you mentioned, which have the potential of reutilizing, redeveloping, intensifying those assets to be part of the solution. Someone who bought a piece of land 50 years ago doesn't need to worry about the cost of land today, which a new developer does. And that land can be repurposed, redeveloped, rebuilt, intensified, and bring all those values that we were just talking about to the market. And I believe that's where your proposal of this newly established fund will play a huge role. Maybe walk us through that fund. What's the structure? What's the purpose? What sections will it hit? And we go from there.
Yeah. So it's a couple, just as a quick context, one of the things that we've done, so we have a strategy on how, as Woodgreen, we are going to scale ourselves from 5 years ago, less than 1,000 to 5,000 by the year 2030. And the magic of that really isn't that we're going to become a full-time developer because we have other things, but because of this partnership approach that we want to get involved in. We've started to get involved in, and will actually carry us there. We're pretty confident about that. We also do a lot of acquisitions that are acquiring some of those properties that are falling off the market from the private rental, especially class C and D type of assets that house the hardest to house and the poor and low moderate income. So that's what we're doing. What we've also done is invested in a bit of R&D. And in our R&D, we actually won a competition that is sponsored annually by TD. And that competition awards solutions. And the solution that we came up with that we wanted to address, because we looked at the value chain of the actual development process and said, where are we getting stuck as a nonprofit housing? Now that we don't have upfront big cash from governments, where is the opportunity for us? What is it that is going to help us jumpstart development? In our research, of course, we found out that many of the medium and smaller potential developers have a similar problem, and that is the problem of upfront equity. When you look at the development chain, we actually have a very fortunate development market, because if I could start from the back end, CMHC, for all its issues, is probably one of the best long-term lenders, right? Debt financing is not our biggest problem, contrary to most other places. And that's huge. That is really huge. When you start coming down to the rest of the value chain, and you look at issues such as construction, we're doing a good job in saying our construction needs to become more efficient. It needs to return to those standards of architecture and design that produce communities. The market has been shocked out of its propensity for density. And unfortunately, we have 30,000 units that are close to 30,000 units that are the back end of our issue from the last decade. And hopefully we'll find a solution to that. But what we're beginning to see is an appetite for complete buildings, for 2-3 bedroom units, family setups, and a redesign conversation. So there's a lot of good things that are coming out of that. Woodgreen, in partnership with Assembly, is currently building modular mass timber building that's also an infill on the Danforth that also fuses the old church that was there, returning the worship space, creating community space, and also affordable housing in the same structure. So trying to model those ethos, notwithstanding those examples. And the industry is got all kinds of models out there on that journey. The biggest barrier that we found was that pre-development financing. And so we focused our efforts on two things. One, how can we create a vehicle that allows people to borrow, to tap into a fund that is acyclical to the extent that it's a revolving fund that allows people to jumpstart development? Because development really is about a jumpstart process that gets you to that reliable long-term benefit, long-term debt world ecosystem, whether it's private or it's CMHC. And so what does that look like as a vehicle? And how can we make it a sustainable kind of vehicle in terms of a fund where you can borrow, integrate it into your long-term funding, your long-term debt, and repay that into the fund? Make that sort of that short-term. Yeah. And it doesn't have to be concessionary. It can have a price. The most interesting thing about a vehicle like that is that it also forces developers to create a mixed income building, because you need affordability as a public benefit, because you're getting this vehicle is ostensibly created and has guarantees and other things that allow you to borrow at a cheaper rate, but in return for some degree of public benefit, which we'll call the affordable housing component. But the other component of it has to remain market, because that's how you repay that equity or investment.
Create that balance.
That's correct, that you've borrowed. So you get an outcome that is desirable from the architecture of what we're building, from the social impact of affordability, and at the same time provide actual money to a cohort of developers that are mission driven to a certain extent, but still very, very aware of they have to make a profit, and there's nothing wrong with that. The second part of this public benefit vehicle for us was capturing the moment. And really what this moment is right now is because of the shock created by the sort of tail end of the previous era of that density-driven, dollar return-driven that really fell apart. There's something needs to happen in order to create confidence in the market and bring back the development sector and make people who are going into 100% into technologies and other new stocks think about rebalancing their investment and giving a portion of that to housing. And that's a guaranteed facility. And so we've been working through this affordable housing revolving fund or investment fund, looking to see how it can be created with a certain degree of guarantee, backs either a backstop or an initial cash inflection by government or major lender. And I'm just going to leave it at that basic level.
So at this time, sorry, just to get this clear. So at this time, you guys have through partnerships, because I know on that report that you guys did, you had some partners. I think you had included Arcadis was the lead, and then you had, I think there were a couple other institutions. So you've come up with the concept, you established what you need. What stage are you at right now? Is there a mechanism for a private sector to be able to invest in this fund as of today or near future? Or is this something that's still being figured out?
So I've framed the parameters of the mechanism. What we're working on between now and the next 6 months is a process of we've created an executive committee. We had a very successful launch at the TD building, actually at the Canoe. And we invited both private and nonprofit developers, including people from the investment, and showcased what this could look like. So we've set up an implementation committee. That implementation committee will work in the next 6 months to do a couple of things. One is to hire a consultant that will turn this into a business case. And number two, will engage in both the investment and developer sector in trying to make sure that we create something that is homegrown, that is connected to the real needs of the industry, but which will allow us to provide a model on how to remake the market so that it can start to jumpstart. Very clearly, the provision of that injection capital at the front end, investment capital at the front end. So that's the homework that we have to do in the next 6 months. Turn that conceptual work that was done by Arcadis, which is a reputed consulting company, economics and all other fields, including real estate, and turn that into a real vehicle. We've done significant GR work with the province of Ontario in particular. And here I'm just going to say it, that the feds have their hands full on the CMHC and long-term debt. The province has done a lot of work as well in impacting the value chain around the approval world, the approval process and so on. I do think, though, there's still an opportunity for them not to go into a grant-based sort of relationship with the real estate sector, but to go into a guarantee and return-based sort of vehicle so that the taxpayers' money that is invested is actually returned and actually earns a return, but at the same time provides that really useful jumpstart to what we're saying we need right now, which is a remake of the real estate sector based on those principles of public
and
and
I
profit.
really like that word jumpstart that you're using, because, and for us to put this in context for the listeners, I'm live example that I'm trying to help a nonprofit and charity organization, community organization to use or better use their existing assets and lands. And like you said, exactly what you said, to go from point A, which is today they own a property, which is doing what it's doing. It's not properly probably being used to the extent that it could be. To get to a point that they can actually talk to CMHC or the federal government to get long-term financing for the construction or the takeout of the project at the end, there's probably $1 or $2 million worth of gap that needs to be filled.
That's correct.
And despite the fact that we've had like conversations with the team, and also we've had conversations with private developers who could potentially be interested, like you mentioned, of bridging that gap and say, you know what, we'll come in, we'll bridge that $1 or $2 million gap to help you with the soft costs and the upfront design and the upfront approval process, reports, and everything else. But what's the guarantee? What do we know? What if this project never goes ahead? And at that point, like, how do we structure it? How do we formulate it? And I think one of the things that I'm hoping is going to come out of what you're doing and your team is doing is that a formula for creating a financial product for a private investor to come in and say, you know what, here's my $500K, here's my $1 million. And I know there's a mechanism for it. There's a system for it that at the end of the day, I'm clear on the amount of risk I'm taking. I think at this point in time, if a private developer comes in dealing with a non-for-profit or a community center or affordable housing provider, at least from my perspective, it's not 100% clear in terms of what is the risk-return relationship they're looking at, because that vehicle maybe is not formed clearly. Did I get that right? Or
You got that right. And think about it this way too. It's also starts to become a one-stop approach, because right now, to your point and my point and more how we do development, we have to come up with that upfront step. Even as a nonprofit, the city doesn't talk to us until we've got, if we have our own land, that's good. If we use the city's land, that's good. But that whole approval process leading up to design and all the studies that we need, and finally doing this final submission, we have to front end that cost. And think about it this way, that $1 million, if you have it, then unlocks those relationships, those funding programs that the city has, like the rental housing supply program. It unlocks all the grant portfolio within the CMHC. For crying out loud, honestly, BCH has been set up like that. They want to deal with people who only have an equity gap. That's their primary client. So even for us, we have to go to BCH as a nonprofit with some solid proposal that we've already pre-financed. You can see how that does it. And you can see how when you have a place, when you start to create an institution like that, I can come into that institution, and through that institution, we can calculate what I need in addition to submitting that application from what I need being the same application that goes to the city in order to add up the entitlements, so that at the end of that conversation, we have a full sense of what is available to us from the system in order to make this project viable. Now, you have to raise it yourself. Then you have to put an application to the city for the rental housing spread. Then you have to deal with CMHC as a separate thing. That's
too many parts to that puzzle right now, and it needs a lot of energy, effort, and money.
That's correct.
To try and stick it together, to bring it to a point that you can actually defend the project.
That's correct. And I think using a concept like this, and God knows where we would land after doing the consultation and the engagement that we want to be involved in the next little while, where we're going to end up. Yeah. And again, as Woodgreen, we're doing this as a sponsor because we have an R&D, because we realize that we are in our own ways as a nonprofit, have a non-risk type of privilege where we can go get R&D money and use R&D money to create a systemic solution. That is what the people who gave us the money were totally attracted to as a sponsor to do that. But it's not something that we're going to own. It's going to be something that we will also then be able to tap into, because it's a co-creation of the sector.
You're creating a solution for the environment, as part of the ecosystem for the industry to
That's
use.
Correct. Yeah. And it's for both private and non-profit, as long as you're in the mission of providing a mix of affordable and market housing and creating sustainable, healthy, mixed income communities.
And to your point, the marriage between the two will be probably the winning criteria in that equation. Thank you for elaborating on that. We have a tradition on this podcast that we ask our guests toward the end, if you had a magic wand right now, if we could give you a magic wand for the next 5 minutes, and you could make a wish to change a mindset, a regulation, a law, a guideline, a way of doing things to improve the situation that we're currently in, what would that wish be?
In some ways, the concept that I have informs my response to your answer, the concept of the one-stop situation. We have too many jurisdictions, too many sources of money, project money. In some ways, compared to the 1970s, we have way more money available. What we don't have is a facility and a coordinated sort of one-stop place where we bring all these resources. Too many of us have territorial elements into the support system for the real estate industry. So my wish is to start to have the conversation around creating these hub-like concept, these scale type of solutions where we aggregate all the capital, all the money, all the benefits, all the entitlements, and begin to actually jumpstart. So the most important thing right now that we have as a barrier is stewardship. And by stewardship, an institution, a spirit, a relationship in the industry that taps into everything that we're all trying to put in to create the solution. And there's great efforts and stuff in order for those to create like a synergy and a scale type of outcome. And it's only through that, a scale outcome, that we're going to be able to have housing play the role that it must play in order to resolve the problem of affordability. Because like I said at the very beginning, it is the primary driver underpinning the whole affordability problem, notwithstanding other factors like groceries and daycare and our daily amenities and how much it costs for us to repair our cars these days, God knows. So that's
not cheap. That's not cheap for sure.
That's not cheap either. Yeah. Yeah. So that's a big answer to your question in some ways. But like I said, that's why we're modeling the Affordable Housing Revolving or Investment Fund as an example of an ecosystem, stewardship entity. And there are examples. One of the really good examples that I would like to visit a little bit more in our research is the Greater Minnesota Housing Fund, which started off precisely with the intent of being a steward in resolving the issues that we spent the last 1 hour dealing with. And they're a good example that we are going to pursue in the next several months about how you actually do it, because it's also important that we not try and reinvent the wheel. And
100%. Yeah. We don't want to solve something that's resolved, and that's not the efficient use
and that's the beauty of it, right? We're not looking for solutions that don't exist. They exist. Yeah.
Thank you very much, Mwarigha. I very much appreciate you being here, and I'm hoping that in the next 6 to 12 months we might hear a lot of good news about what you're doing and solving this serious problem for the nonprofit sector. That I can attest to that. And
for the purpose-built rentals.
For the purpose-built rental sector.
Yeah.
And I hope to have you back for the second round and with a lot of good news. Thank you very much.
Fantastic. Thanks a lot for having me, and we'll keep the conversation going.
Fantastic. Just one last thing before you leave, please make sure to visit our website. We have put together a whole bunch of different resources that you can download for free from our website. These include checklists, manuals, and also access to previous webinars. In case you have missed any of our previous webinars, you can go there, get the replay link, download the slides, and benefit from all these free resources that we've gathered on the website. Please make sure to visit. Thank you.